Hello and welcome. Today, we're going to talk about the credit process and securing financing and how they can help you and your business grow and expand internationally. The process of securing trade financing and loans. Each lender has specific requirements and criteria that must be met before funds can be advanced to a business, and some lenders are more risk-averse than others. The type of lender, bank versus non-bank, large versus small, and their appetite for risk will also determine the interest rate a business is charged and the repayment terms. There is a clear process when applying for a loan or other commercial instrument. What is the process for securing trade financing for my business? While the exact requirements may vary based on the subtle nuances of each situation, there are generally four main stages in the trade finance application process: application, assessment, negotiation, and approval. 1. Application. The process begins when the business submits a credit application to the lender. When applying for commercial finance, the lender will ask for a range of information about the company, the individuals involved, such as directors, and details of why the company is seeking debt finance. Commercial finance is typically best suited to companies that already trade domestically or cross-border, so most lenders will expect to see some sort of track record showing trading income from past transactions. Some of the most common items that lenders will require in an application are 2 to 5 years of financial statements, e.g. profit and loss statement, balance sheet, cash flow statement, and, if available, management accounts, creditors' ledger, debtors' ledger and shareholders' ledger. Budgets and forecasts for at least the next year. Details of any assets the company or its directors own, e.g. property, equipment, invoices, etc., that could be used as collateral. Details of any liabilities, e.g. loans, overdrafts, etc. Description of business cycles. Current purchase orders. Current invoices from suppliers or customers. Other items may include a curriculum vitae, CV, or resume for each of the directors. Bank references. Information about related companies, e.g. group companies, suppliers, buyers, etc. A business plan with financial forecasts is generally essential to show a banker that your business idea is sound and realistic, that you can successfully implement it, and that you know what the finance will be used for. Business plans vary in format, but typically include a full introduction to the business, including a future vision and objectives of the business and any significant achievements to date. Information about key stakeholders and directors, including past experience and the company's equity composition. Introduction and analysis of the product or service offered. Industry overview and competitive landscape. Summary of expected results, including financial forecasts. 2. Assessment. The lender will carry out a full credit risk assessment of the documents they receive. The credit analysis will usually involve inputting figures from the applicant's income statement, balance sheet, and cash flow documents. The analysis will also consider the quality and quantity of collateral the company can provide and the status of suppliers, customers, and business cycles. The assessment process will usually involve some form of credit scoring, taking into account any vulnerabilities such as the market the company is entering, the likelihood of default, and the quality of management. A credit score is typically rated from AAA, a very low risk of default, to D, likely to result in denial of a loan application. What does a lender look at to determine an applicant's creditworthiness? Lenders will typically look at several key qualitative and quantitative metrics, including key financial information, management and director credentials, market and industry, transaction risk, collateral analysis. 3. Negotiation. Eligible businesses applying for commercial finance can negotiate terms with lenders, which is a critical step given that the goal of a business with a lender is to secure finance on the most favorable terms and rates. Some of the terms that can be negotiated include non-interest costs, fees, fixed charges, and interest rates. If you are prepared and understand the structure of fees and charges, this can help you negotiate terms that are in your favor. Sometimes it can be a good idea to seek advice from your local trade body to avoid risks and understand the charges and structure of the loan and insurance. For approval. If all goes well, the next step in the process will be approval. Typically, the account manager who initially deals with the applicant and collects all the documentation will carry out an initial credit and risk analysis. This will then go to a specific committee or the next level of credit authority for approval. If the loan is agreed, preliminarily, it will go to the legal team to ensure that the collateral can be secured and to mitigate any risks in the event of default. A senior officer from the bank will also need to sign off on the loan documents. The loan document is a legally signed contract by both parties that consists of definitions and a full description of the financial instrument that has been agreed, e.g. amount, duration, interest rates, currency and payment terms, interest and non-interest charges. The loan terms will also be included, which will outline the obligations of the buyer and lender, as well as what would happen in the event of a dispute or default. Repaying loans once approved. To maintain a good relationship with any lender, the company must make timely payments of the debt, including interest, in accordance with its contractual and legal obligations. This should also protect the company's credit rating. Establishing and maintaining a good reputation as a borrower is essential to accessing more financing and greater facilities as your business grows and trade volumes increase. If you enjoyed our video, please like, comment and share so that this video can reach more people. Thanks for watching and see you next time. And follow us on Instagram at BusinessGreenBR.